This video is an explanation of Chapter 5 practice exercises starting with number 4. In this one, we're going to be adjusting depreciation of an asset. So we purchased this delivery equipment on December 1st for $9,702. It has an estimated useful life of 4 years or 48 months with no salvage value. So normally, what you do for calculating that is take the 9,072 and the useful life in months. You would subtract the salvage value from the 9,072, but since there's none, makes it a little easier. So it's equals 9,072 divided by the 48 months. So that would give you $189 for each month. So since they bought it on December 1st, they had it 1 month, so we would depreciate it $189. And then we would go down here and depreciation expense. Usually when you're making an adjustment, the expense is the debit, and you would credit accumulated depreciation delivery equipment, which is a contra account, because in your asset delivery equipment, you'll always show the original value of the equipment that you purchased. And then there will be a contra, which means opposite, right below it, that's a credit account that shows how much it was depreciated. And you should have read about that in the textbook. And then check your work. And there you're finished with that one. So number 5. Okay, this is an example or a practice in calculating straight line depreciation. And what that means is that we depreciate the same amount every month for the period of time that we own it. So let's say that in this case we had a $5,700 item. We're going to have it for 60 months, and it doesn't have any salvage value. So it's equals 5,700 divided by 60 months. So we would be depreciating it $95 for every month. Now in this case, we owned it all of June, July, August, September, October, November, and December. And the reason I did that was because I wanted to show you that that is 7 months. Because when we think about June to December, it makes it sound like it's 6 months, but it's 6 months if it's July 1st to December 31st. So you want to be sure that you calculate it on the 7 months. So it'd be equals $95 times 7 months of depreciation would be a total of $665. They're asking us to calculate the book value. So that would be the 5,700, so equals the 5,700 minus the 7 months of depreciation for a book value of $5,035. Several steps there. Again, let me kind of mention it, what I did. I took the book value of 5,700. I divided it by the 60 months to get $95 per month in depreciation. We owned it 7 months, and so it's $95 times 7 months, and then we take that and subtract from our book value, or from our original value, and it's $5,035. Okay, practice problem 6. This is your worksheet and adjusting entries. They want you to complete the adjustments column for the worksheet. So we have an adjusted trial balance column. So if the trial balance and adjusted are the same, then you don't need to do anything. Here for supplies, we had $833, and we're left with a debit balance of $135. So we need to subtract that. And again, I said 833 minus 135 is $698. And that's how much we credited out of there because we had used those supplies. So we're subtracted from that asset. Debit of 833 minus credit of 698 equals 135. Okay, we need to do the same thing on the next one. And that one is equals 945 minus 315, 630. So we had prepaid insurance of 945 and now it's a debit balance of 630. So when we subtract that 630 out of there, 945 minus the 630 equals 315. The next account has no adjustment. The next one, $600 credit, and now we have a balance of 800 credit. So we depreciated our equipment $200 that month, and it goes into the accumulated depreciation. Wages payable, we have a $98 credit, so we need to put 98 in the credit side. No effect to capital, not an adjustment, no effect to fees. And then we get to our wages expense. We had a 587 debit, and now we have 685 credit or debit. So how much did we add to it? We could subtract that to find out. Equals 685 minus the 587, and so it was $98 that we added to it. 587 plus 98 equals 685. 201 for advertising, no adjustment there. Supplies expense was 698 debit. The next expense was 630 debit for insurance and a depreciation expense of 200. Then you want to total those two columns. This is when a spreadsheet comes in handy, because if you have an error, it's a little bit easier to find it on a spreadsheet than a calculator. So we add in 98, 698, 630, 200. And then on the other side, 698, 630, 298. And we can auto sum those. If I can find it. And I can fill it across, and that amount should be the exact same, and it is. So I put that in here, 1626, and check my work. Okay, and then one more. Okay, and this one we're just going to journalize. We don't have to do any calculating. They've already calculated it. They just tell us what the expense is, and so we put the journal entries into our official accounting form. So we choose supplies expense for the first one and a debit amount of $750. We choose supplies to credit. Every entry has to have a debit and a credit. The next one, insurance expense, and that one's 700. The next one's prepaid insurance, and that's a credit of 700. Depreciation expense, 200. Accumulated depreciation, 200. The last one, wages payable, so you'd have wages expense of $100 and wages payable of $100. Adjustments may not be easy, but it just takes some time, and you'll find after redundantly doing the problems that eventually it kind of becomes second nature and you know exactly what to do. just because you've done it so many times. End of this video.